I'm Brooke Thackeray. Welcome to the week ahead for December 21st, 2020. Today I'd like to take a look at the stock market's performance last week and the sectors of the stock market as well, and take a look and see what they're indicating for the performance coming up over the next 1 or 2 weeks, or even into the future from there. So let's jump right in by taking a look at the S&P 500 as well. So if we take a look at the S&P 500, we can see here that we did see an all-time high for the S&P 500 last week on Thursday, and Friday we saw that pullback, but who can complain with an all-time high? The relative strength index is showing still a little bit of a divergence. We haven't seen that price momentum pick up, but nevertheless, we're close to an all-time high once again, and also too, there's a lot of euphoria in the market, and it can keep going as well. The price action last week, we did see that down day on Monday, which is unusual compared to what we've seen over the last number of Mondays. Usually what we'd see is a vaccine announcement and the stock market would be supported on Mondays, and this tended to happen on Mondays, but we did see that down day, then 3 solid up days to an all-time high, and then we saw that pull back on Friday as well. As far as the overall indexes last week, the big winner was the NASDAQ, coming in at over 3%. Now, I want to point out the NASDAQ actually started its strong seasonal period last week on December the 15th, and it did quite well. And that seasonal period runs until mid-January or even until late January as well. Of course, it can keep going from there, but this is where it tends to perform quite well. The S&P 500 produced a return over 1%, and the S&P TSX Composite produced a nominal loss for the week as well. And if we take a look at the U.S. sectors of the market, we can see here the big loser was the energy sector, producing a loss of over 4%. Now, that helps explain why the S&P TSX Composite Index produced a nominal loss, of course. The technology sector, interestingly enough, produced a return of over 3%. So it was the winner last week as well on this. And the technology sector tends to do well this time of the year. Now, it hasn't done well recently as well. So I want to talk about the technology sector. I want to point it out to you in my book. So first of all, I want to put it a little plug-in for my 2021 Investors Guide, which I just got the other day. And it should be in the bookstores coming up in the near future, in the next few weeks as well. And if you take a look here, you can see here there are some new strategies: Oracle, Snap-on, Loblaws, Tyson Foods, Rogers Communications, and more. And so that I've done some different formatting with graphs, and also put in a COVID performance update as well. But let's take a look at the technology sector here. The technology sector, so I've addressed this, has 2 seasonal periods. There's this brief period at the beginning of December where the technology sector tends not to perform well. And if we take a look here, that's since 1990, we've seen the technology sector from December the 6th to the 15th has only produced a positive return 29% of the time, which is very poor. And that's exactly what we've seen recently with the technology sector. We've seen that pullback that's taken place. I'm going to go into that in a little more detail later on, and what it means for the market. But now, as the technology sector has come back into its seasonal period, its stronger seasonal period, it's actually done quite well. I want to point out that January tends to be a strong month for the seasonal period for the technology sector. This cross here represents the median return since 1990 for the technology sector. The bar represents the average or the mean, and the diamond represents the average for the S&P 500. So the technology sector tends to be one of the stronger performing sectors for the overall stock market. I know there's been a lot of the talk has been on the reflationary trade, the cyclicals, and the growing economy, and we've seen the the technology sector pull back on that. But I want to tell you that we are in that strong sweet spot for the technology sector, and it's starting to look like it may actually perform well here as well. If we take a look at the performance last week of Tesla, okay, that was also a notable performance as well. So Tesla got added into the index on Friday at the end of the day, and you can see here that this middle bar here represents Tesla performance relative to the S&P 500. You can see here it's gone up like a rocket. It's kind of crazy, outperforming by over 600%. And we've seen this recent strong price action as well. And this price action has largely been as investors have anticipated the Tesla being added to the S&P 500 index. And it tends to push up the price of Tesla because the indexes or ETFs are forced to buy it to represent the S&P 500, and retail investors want to front run that trade as well. So there tends to be a lot of excitement that takes place, and we've seen that strong performance. The company right now is 24 times price to sales. That's not a PE, that's price to sales. So it's extremely rich for a car company, but a lot of euphoria around it as well. Look at this price action on Tesla on Friday in the closing bell. So this graph represents the one day. This is the Friday, basically, on a minute-by-minute basis. Look at Tesla, actually. So just a couple minutes before the end of the trading day, it was trading at 666, and then it rocketed up. It's hard to see that line right here, but look how far it went up from here, all the way up to 695. So it's almost up 6% on the day. So just in the last minute or two, it skyrocketed as investors plowed in to get the representation for Tesla. So that was definitely a notable occurrence last week as well. If we take a look at the what's coming up this week as well, so we talked about Tesla, so now it's included into the index as of Monday. It's a light week, obviously, with Christmas week. We have the markets closed on Friday. We've got the growth rate on GDP growth rate quarter over quarter on Tuesday, and the PCE prices. So we might get some indication as far as inflation goes. And a lot of people follow CPI, but PCE is actually a good indicator to follow as well. Personal income as well on Wednesday, personal spending, and then we got durable goods on Thursday. So that should give us an indication, or help give us an indication about the reopening of the economy as well, and see if that's upticking at this point. And I just want to take a look at the technology sector as far as the spotlight goes. And we've talked a little bit about the technology sector already. Now, the technology sector has outperformed the S&P 500 over the last few years. And there's been some different reasons why and different variables that have impacted that. But the technology sector is a growth sector, which means that it benefits from falling interest rates. And the reason why it benefits from falling interest rates is because the opportunity cost is less as interest rates decrease, going into a growth sector where the earnings stream that you're expecting is further out. So, and I wanted to point that out today because that could be one of the variables that could actually impact the performance of the technology sector over the next little while. And this is, investors should be following the 10-year yield to see the relative performance for the technology sector versus the S&P 500. Now, there are other factors, but it definitely is something to be taken a look at. So this graph here is the U.S. Treasury 10-year yield. And this graph here is the technology sector relative to the S&P 500. You can see here that the technology sector outperformed the S&P 500 as the interest rates were going down in 2019. And when interest rates were fairly flat, it still outperformed as well. So it's not an inverse correlation all the time. It's just a contributing factor that when interest rates go down, they tend to provide more impetus for the technology sector to go up. And the stock market this year has been trading off a lot of macro variables, much more so in the past. Fundamentals really haven't seemed to matter that much. Macro has seemed to, after years and years of being put on the sideline, actually come back here a bit. And we see here the interest rates fell down, and the 10-year yield technology sector outperformed once again. Now, interestingly here, 10-year yield was slightly flat to slightly, flat to slightly negative, and it continued to outperform. That's because of the pandemic. We saw the technology sector well suited to serve the economy at that time with the companies much more so than the bricks and mortar stores, so it definitely benefited from that. But what I want to point out is September. Look at the beginning of September here, all the way down, okay? What you see here is a peak in the performance of the technology sector, and it starts to underperform the S&P 500 as well. And this is when interest rates start to increase. We've seen as the reflationary trade has increased, we've seen the technology sector actually start to underperform the S&P 500. Now, what's interesting on this, and there's still the debate about the whole reflationary trade, but what is interesting on this is that we've seen a slight uptick recently for the technology sector as the interest rates have remained fairly flat. So this is actually a positive indication for the relative performance of the technology sector as it's in the seasonal period here. And if we do see the interest rates move down, which on a seasonal basis, now it may not be a long-term seasonal trade because it can be fairly short and not that significant, but the interest rates tend to actually be soft or slightly decline in the second half of December and into January. If we do see that take place, that could be supportive of a stronger technology sector as well. So watch the dynamic between the technology sector and the cyclical sectors like the industrial sector and the material sector, and see what's happening with the 10-year yield as well. It should give you an indication of the overall health of the market and whether investors are really buying into the inflationary trade or not. Now, we're at a critical time of the year right now. We're in the last couple of weeks of the year, and we, as I mentioned earlier on, we do tend to see this pivot that can take place. I didn't mention, but let me bring that up now, because in my last newsletter here, in December, my December newsletter here, I included a little article on the December pivot, and this was the pivot term became well known when Powell pivoted in 2018, going from a hawk to a dove, and then the stock market bottomed on December the 24th, the Christmas Eve day as well. But that wasn't the only time the stock market's bottomed towards the end of the year, or topped towards the end of the year. We tend to see a lot of reversals take place, a lot of pivots that take place. 2015, the stock market, the S&P 500, was doing really well in December. In mid-December, it's doing really well. All of a sudden, towards the end of December, it fell apart. Investors just said, you know what, we don't believe in these valuations. And there was really no strong reason for the market to do that. We saw it actually slide into 2016. We see a lot of sectors as well tend to pivot at this time of the year. So what's done well tends very often will actually underperform, or what hasn't done well can outperform as well. And so we see some pivots going back and forth. Now, why this is interesting and important is it's important for us to actually try and monitor what's going on, because this time of year and the beginning of January gives us a good feel for what could be developing next year. And I'll cover this over the next videos as well, the relative performance of different sectors and what they're indicating of what investors believe could be the better trades for next year as well. So it's definitely something to follow. I'd be following the technology sector's relative performance to the overall market, and as well as cyclical performance, and see if it's being driven by the interest rate or if just investors are switching back into the other sectors as well. So like I said, I'll definitely be covering that over the next little while, and examining that, and also taking a look at where the stock markets could be going. Thank you very much for joining me today.